Hey guys, Corey here. I just invested $10,000 into RIVN. In this video, I'm going to explain to you guys why. So strap in because we got a lot to talk about with RIVN. Number one, the hurdles that they face. Number two, why they're likely to succeed and what they need in order to make that happen. Number three, the CEO, Robert Scaringe. And number four, why they are destined to win. So stick around. Let's get started. Hey guys, Corey here. Welcome to the channel. Thank you so much for stopping in. Be sure to subscribe, tap the bell if you enjoy the content, and be sure to give me a thumbs up as it greatly helps the channel grow. Before we dive into RIVN, if you guys are losing money in the market, having struggles, you're not profitable, and you just want to learn more and expand your knowledge, I got good news for you. I just launched my exclusive masterclass bootcamp with only 10 spots available. So if you guys take your financial freedom seriously and you're very confident about making your life better, I have 10 spots available to coach you one-on-one with my full masterclass training course. You guys can sign up at investwithcorey.com/learn or in the information box below. I'm driven to help you better your life. So if you guys want to sign up, you can do so at any time. But like I said, only 10 spots available. I hope to see you soon. I just want to point out that I'm not a financial advisor and this is not financial advice. I'm just here to give you guys tips, strategies, technicals, fundamentals, financials, and help you out on market sentiment. However, it's ultimately up to you to decide which stocks you want to buy and how much of a position size or option size you have in that stock or strategy, as it's your money. So let's dive right into RIVN. Number one, the hurdles that RIVN must go through. Some analysts project a decrease in the EPS this year of 9.26%. Revenue projected is $922 million, down 17%. Regarding the full year for 2024, the estimates are negative $4.04 EPS for the year. This is $1.01 negative for EPS, and a revenue of $4.68 billion total for the year, indicating a 17.2% increase in EPS year over year and a 5.5% increase in revenue year over year. Fisker recently filed for bankruptcy protection. Now, this may be a bad sentiment in the market. However, this is a story of a failed company, not a failed industry. Lordstown and Fisker both went bankrupt. However, these are companies that really don't understand the fundamentals, growth, cash management. They just overall didn't have a good plan. So you see, this really doesn't have anything to do with RIVN, although it's somewhat of a sentiment or a hurdle to get past at some point. A lot of people will think about that and remember it while they're trading, that Fisker, Lordstown, both bankrupt. We also have Workhorse that are having trouble, and Canoo. But the big thing to understand here is that there is a lot more success going on at RIVN than there ever was at Lordstown or Fisker Motors. And in my opinion, RIVN is going to do a lot better than Lucid Motors as well. Number two, how and why RIVN will succeed. Investors are starting to show more interest in RIVN lately because the stock is up 3.82% over the last month, beating the auto and tires sector of the stock market by negative 3.02%. Cantor Fitzgerald maintains a buy and a $15 a share price target. They also opened a new store in Austin, Texas, which is also a good thing because it's going to give customers the chance to experience RIVN and see the vehicles and potentially buy one. RIVN also stated they intend to reach positive gross profit by the end of 2024. This is actually pretty big. If they achieve that, that is going to be huge, especially for quarter 4 24 and quarter 1 25. Number three, the CEO, Robert Scaringe. He recently sold $820,000 plus in shares, which was over 71,429 shares to be exact. Now, this can be looked at in multiple ways. It can be looked at as a negative, that he feels like the stock price is going to go down, so he's trying to get out at a profit as he sold his shares at an average price of $11.49, I believe. And other people might look at it differently, like I do. He also has a lot more shares still available to him. 820,000 is a very low amount of shares for him. So what I take this as is he's a smart CEO. Instead of paying himself bonuses like the CEO of Mullen has done, David Mitchery, which is kind of a scummy move in my opinion, making lots of money, millions of dollars, while your company struggles and you dilute shareholders. This also happened with Fisker Motors. Henrik Fisker also had like a $30-40 million mansion paying himself bonuses while he diluted shareholders, whereas Robert Scaringe did something a little bit better. He raised money for himself through the avenue or channel of financing activities. He sold shares to generate a profit for himself. This way he wouldn't have to take money from the company. That's what I believe is going on, or he's putting it back into the company. Not exactly sure. That would be kind of like a guess, but he's generating money through financing activities by selling shares, but not Not very many, considering he has millions of shares. That is the difference between a bad CEO like David Mitchery or Henrik Fisker versus a generally good CEO like Robert Scaringe, which is the reason why Fisker Motors went bankrupt, Lordstown Motors went bankrupt, and we've got Workhorse as well as Canoo that are both on the brink. Nikola's not doing very well either. As of right now, Robert Scaringe has over 3.5 million shares, even after the 820,000 shares he sold, which is really not even a quarter of his portfolio. So think of it like if you had 2,000 shares of Palantir or Rivian and you sold 400 shares, it doesn't mean you don't believe in the company. Maybe you're trying to put money somewhere else. Maybe you're trying to pay some bills. It's really hard to gauge what's going on here, but I don't take that at all as a bad sign. I take that as a good sign that he's taking profits to pay himself right now or do other financing activities. This way, he doesn't have to worry about taking money from the company so he can let Rivian grow. Number 4, why Rivian will win. Why Rivian will ultimately become profitable and successful and go on to be a very big and lucrative EV manufacturer in the States. The new NextGen platform for Rivian introduces new thermal system with a heat pump. The new R1T quad motor has 1,025 horsepower and 1,198 pound-feet of torque, doing 0 to 60 in under 2.5 seconds. This is extremely fast for a pickup truck or an SUV. In fact, it is just about as fast as the Tesla Model S Plaid, which is 0 to 60 in 2 seconds. This is a full-size SUV. They also have improved their rider comfort and temperature control zones, as well as saved range. New 22-inch wheels and tires with reduced drag and improved aero in order to improve efficiency in mileage. This way, the range will go up. Rivian seems to be successful thus far through something I like to call attrition. It's what the military uses, kind of sticking it out, that you would say in the civilian world. Because Fisker has now went bankrupt and Lordstown Motors is gone, Rivian is able to continue on. There's now less competition, which is what attrition is. All they really have to do is use that same model of attrition in order to continue doing what they're doing right now, trying to generate more profits, becoming profitable by the end of the year. This ultimately will allow Rivian to last until the end of 2025 when they get into launching their more affordable range of vehicles, which at that point is where Rivian is going to take off because it's much more affordable. They're going to make more vehicle sales. All they have to do is get to that point. I also see a lot more Rivians on the street than I do any other electric vehicle besides Tesla. I see more Rivians than I do Fisker. In fact, I've only seen one Fisker Ocean in the New York City, New Jersey area in the last year and a half. I can't count how many Rivians I've seen. I've seen 2 Lucids, no Canoes, and no Workhorse trucks, no Mullins, nothing. It's pretty much Tesla and Rivian, and like maybe a couple, like I mean literally 2 Lucid Airs. It's all been Rivian. I've seen more Rivians lately in the last 6 to 8 months than I have any Ford Mach-E's or any electric vehicles from any other manufacturer. It really is Tesla and Rivian. I see a Rivian almost every single day. I'll pass an R1T or an R1S. And that speaks volumes about how many people are buying the vehicles. As time goes on, more and more people are going to buy the vehicles. So the longer they can use attrition to stay afloat, keep producing vehicles, try to increase their margins and profits, decrease costs, and just become more efficient, the better Rivian is going to do. They're already crossing that threshold as we speak. They've already achieved things that Lordstown and Fisker could not achieve, and they're already achieving things thus far that even Lucid has not achieved. So what it really comes down to is, can they continue attrition, sticking it out, and lasting longer? And I believe they can, because they're making all the right moves. They've also brought on Javier Varela, who used to be the COO of Volvo. He also worked for PSA, which is now Stellantis, back in 1990 for Plymouth and Chrysler, and he reports back to Robert Scaringe. He's going to oversee manufacturing, logistics, and quality. He also expressed commitment to help Rivian scale, and the fact that they also stated that they expect to be completely profitable by the end of this year means that right now is a good time to buy. Let's not forget the R2 vehicles are set to roll out in 2026. The state of Illinois gave them an incentive grant of $827 million. This was to expand operations and to enhance the factory and public infrastructure, as well as job training for Rivian's workforce, which will allow them to train more people for the workforce. So as they increase their production capacity and volume, there'll be more people trained in order to keep up with the demand in the upcoming sale of the R2 vehicles, which means Rivian is already using that money to prepare to scale in the next year and a half. Rivian's making all of the right moves. and they have a really good CEO as well. Rivian's a good company overall. When you look at the whole picture, Rivian is doing very well. If Rivian can make the strides until the end of 2025 with Javier Varela, with his experience, we're going to be in good shape. If they have better earnings, even slightly better earnings each quarter for the rest of this year and become profitable by Q1 2025, next year is going to be great for Rivian. In that scenario, I estimate Rivian is going to be somewhere between $15 to $17 by January, and if the launch of the R2 goes very well, next year we could be up in the $20 range. So let's dive right in, show you guys my position, how you can sell puts and calls to make great profits with Rivian. If you guys enjoy the strategies I am about to show you in this video, you guys can sign up for my one-on-one coaching at any time, full Discord and training course as well at investwithcorey.com/learn or in the information box below. So I will do everything I can to help you as long as you're serious. I hope to see you soon. All right, so you can see here looking at Rivian, we are resisting heavily on this uptrend. We have 1 touch, 2 touch, 3 touch, now 4 touch. The more touches, the more accurate. This is a pretty strong uptrend. You can see on the daily chart, it's heavily resisted this line. On the 4-hour chart, it's resisted a bunch of times. We're consolidating here, and we also have a little bit of divergence going on. See a bear divergence, then it dropped, and now we have a little bit of oversold going on, actually quite a bit. So it's likely it's going to come down. It's going to resist off this line, and it's got a good shot at bouncing back up. Plus, we're at the bottom of the Bollinger Band, and the 10 has crossed over the 20 and the 100-day moving average. So it's likely we're going to see a little bit of consolidation and drop, and then a recovery by the end of the week. So here is my $10,000 position in Rivian. I have 1,000 shares in my small account, and so I am selling covered calls to help offset the fact that I'm negative $800. My average cost was a little higher, so I brought it down by dollar cost averaging, then sold a bunch of aggressive calls at $10.50 to make back $258. Once Rivian closes this week below $10.50, if it does, I keep all that premium. I'll sell another week worth of aggressive $10.50 calls. If the stock price goes down below $10, I'll drop my calls to $10, and then I'll roll them back out and up to $10.50 if the price goes back up. I'm going to do what I can with these 700 shares to generate $800 in the next 3 weeks. By the end of the month, I'm going to break even. Even if the stock goes to $8, I'm just going to sell $9 calls. I've got it all figured out to make back most of this, but that's not going to happen. It's highly unlikely. The price might fall to $9 or $9.50, but even if that's the case, I'll make back this 800 by the middle of July, and by the middle of August, I'll make back any more of the drop. And if not, bullish case scenario, if Rivian goes to $10.50, I'll get assigned and I'll sell the stock. I'll make $133 in the shares because I paid $10.31 plus the $258. That'll cut this loss in half, and I'll continue selling calls on the other 300 shares, and then I'll sell puts. I'll sell another 7 put contracts to make another $200 at $10.50 to get in at $10.50 again if the stock was to come back down from 11 or wherever it is, back down to $10.50. But I've got this plan figured out so that no matter what Rivian does, if it goes down, I'm going to keep rolling and selling calls to make up my loss. If I get assigned at $10.50, I've cut my loss in half, and I start selling puts as well as more covered calls on the remaining 300 shares. But either way, it cuts my loss back to break even no matter what in the next 2 to 3 weeks. And then I'll start adding more to my position because I believe in Rivian. So ultimately, I would like to see Rivian sit around $10.40 so that I keep my shares, and then I can start selling $11 covered calls on the 700 shares, because ultimately I would like to keep the shares and I would like to add to my position. And in the next month, I might just buy another 10 grand worth of Rivian in this portfolio. I already have 25,000 worth of Rivian in my large portfolio, but just in the small portfolio, I am aiming to have 2,000 at some point because I do believe in Rivian, but I don't want to get too nuts and too crazy. So let's dive right in here and show you guys how you can make some money. Selling puts is great. If I get assigned next week, let's say the price goes to $10.50, I get assigned Monday, the price drops to $10.40, $10.30, somewhere, similar to where it's at now. I can just go ahead and start selling $10 puts or $10.50 and go aggressive if I think it's going to be more of a bullish scenario. But worst case, if I get assigned at $10.50, cut my loss in half, I'm only going to be out $400 at that point because I made $400 off the $800, leaves me still in the negative $400. So if I get assigned at $10.50, I'll just go ahead and start selling $10 puts, and I'll click continue. I'll sell this for $30. Since I got assigned for 700 shares, I'll just buy 700 more shares with the puts. So I'll sell 7 contracts. There's 200 a week. There you go. 2 weeks of selling puts is 400 plus the 400 I made getting assigned on the calls. All my losses are gone, and I've now got 1,000 shares of Rivian still. If it doesn't work out that way, well, then I just keep the shares and sell another week's worth of covered calls for $200, and I'll do that for 2 more weeks, and there you go. All my losses are mitigated. If the stock drops to $9.50, well, then I obviously keep the shares, and I'll roll my covered calls down $10, make another $150 $50. Do that for 2 weeks. Once again, all losses mitigated. Do you see the power of selling options? It doesn't matter what happens unless they go bankrupt and go to zero or go to $5, which is highly unlikely. Even a drop to $9 in 4 to 6 weeks, all my money's back anyway. If they stay above $10 in 2 weeks, all my money's back. I continue to sell covered calls and I go into profit. Selling puts is extremely powerful. There is no other strategy on the market that's better than selling cash secured puts, as long as you do your due diligence and you do it on companies that are profitable or are growth stocks like RIVN. As long as they have growth potential, they're good stocks, good companies, no fear of imminent danger or bankruptcy, then selling cash secured puts are very safe. Worst case scenario, I get assigned, I get to buy back all the shares I was assigned on, hypothetically, because it hasn't happened yet, but I get to buy back all the shares I was assigned on the covered calls. No big deal. But this is what I would do. At this point in time, I would sell $10 cash secured puts. You can make $30 a week juicy premium just selling these puts, and you figure in a month that's 120, so that's about a 10.2% return per month. That is very good return. $120 a month on $1,000 is a very good return. It's safe. Worst case, you just get assigned the stock. Then what you're going to do is you're going to swap over to start selling covered calls, and if you go out 1 week selling 10.50, you make 37. You go out to 11, which is even safer. This is a 30 delta. This is good. Make $22 a month, so you're looking almost another $100 a month. So this is a 10% return per month. This is a very good play. RIVN is very good. This is why I invested $10,000 into RIVN, because right now they're at a low. I don't think the floor is $10. I think it's strong support. I think the floor is $8.50 to $9, not too far out. Even at 1,000 shares, that's, you know, $1,000 drop I'm looking at, but they can be made up for by selling covered calls and cash secured puts. It's not a massive drop. I think, you know, ultimately we're not far from the floor, and we're also sitting on a very strong support. So RIVN, as you can see, you can make a lot of money. $9.50 and $10 are the two great spots to sell puts, unless you want to get in right away at $10.50. And selling covered calls right now at $10.50 to get out like I am to make back quick cash, not caring if I get assigned, is the most safe and aggressive way to make premium, because I don't care if I get assigned and lose the shares, and I don't care if I keep them. I don't care either way, so might as well collect the most premium possible. And that is the beauty of puts and calls and owning shares and running the wheel like I do in my safe strategy, like I teach in my Discord and my training course, investwithcorey.com/learn if you're interested. And I teach all the aspects, delta, gamma, theta, vega, and rho, and implied volatility and all of this stuff. And you can see right here how it's so powerful. I sold puts to get in, dollar cost average. Now I'm selling covered calls very aggressively. Don't care if I get assigned. I'm making the most premium. If I get assigned, cool, I sell puts again to get in. If I don't get assigned, I keep selling aggressive calls to make all that juicy premium. At this rate, if RIVN was to stay between 10 and 10.50, I'm making $1,000 this month just on these covered calls, and I don't care if I get assigned or not. I'm happy if I keep them. I'm happy if I sell the covered calls. And that is the best thing as an investor, is not caring if you get assigned or not and collecting mad amounts of juicy premium. So you can see why I invested $10,000 into RIVN. Juicy premium with my strategies, but not only that, they're a very big momentum and growth stock. They have a lot of potential, and everything they're doing right now lines up perfectly with what you would expect from a growth stock and an EV startup. At this point, I have a lot in RIVN, almost $40,000 between both portfolios and RIVN. I do really believe in the company. I do. And you know what? At this point in time, I've generated almost 40% of what it cost to buy the stock, and my big portfolio I've already generated in covered calls. I spent over $20,000 and I've made back almost $10,000. So I'm really at an average cost right now of only around $6 in my large portfolio. So at this point in time, I don't really have any risk. Even if RIVN goes to $6 in my large portfolio, I'll just break even. I've just been continually selling covered calls and benefiting from theta, implied volatility, as well as consolidation. Every time RIVN consolidates between $9.50 and $10.50, I'm making bank every month. I'm making hundreds and hundreds of dollars every week from that. And it's adding up week in, week out, month in, month out. It's just working. You can see why RIVN is a big play for me and why I believe it's an ultimate buy right now. If you guys enjoy the strategies that I employed in this video, you can sign up for my masterclass boot camp that I exclusively launched this week. Only 10 spots remain for one-on-one coaching. If you guys are interested, you can sign up at any time. investwithcorey.com/learn on the screen or in the information box below. I would love to help you. And if you're serious about bettering your financial health and future, I would love to teach you and help you any way I can. Thanks so much for being here, guys. I really appreciate it. Be sure to subscribe and tap the bell. And don't worry, guys. I know this video is over, but I got another video just for you, and you're going to love it. And it's covered calls fully explained, the last covered call video you will ever have to watch. So click it, check it out, learn everything there is to know about covered calls until you're ready to sign up for my masterclass. And then once you are, I'll see you over there. But until then, I'll see you on this video. I look forward to speaking with you. Remember, guys, let's grow our wealth together.